Welcome to the Deep Dive. Today we're looking at Itochu Corporation, specifically their 2024 integrated report.
That's right. We're aiming to pull out the key takeaways for you.
Think of it as your quick guide to understanding this major global company, their businesses, how they plan to grow, their financials, and what they're doing for shareholders.
So let's jump in. What really strikes you first, I think, is their guiding principle, Sempoyoshi.
Sampoyoshi, that's the Japanese concept, right? Good for the seller, buyer, and society.
Exactly. It's not just, a slogan. It seems to genuinely underpin their big strategic plan, the Brand New Deal, which they launched back in April 2024. It's their roadmap.
Okay, the Brand New Deal sounds significant. The report mentions three key pillars.
Yeah, essentially. Grow earnings, enhance the corporate brand value, and shareholder returns. Pretty clear goals.
And it seems the market paid attention when this was announced.
Oh, absolutely. The report notes their market cap shot up over 12 trillion. That's a strong signal. It usually means investors like the direction.
So a key part of this deal is this idea that profits are moving downstream. What does that mean for a giant like Itochu?
Well, fundamentally, it means getting closer to the end customer, really understanding what people want.
Okay.
They give a great example in the report. Rawayan Co., Ltd., it's one of their group companies, makes underwear.
Right.
By really digging into consumer needs and then rebranding, they actually boosted profits quite a bit. Even in textiles, which isn't exactly a high-growth market typically, it shows they're adapting, focusing on the market side.
That RYN example makes it tangible. So less about just making stuff, more about who's buying it and why.
Precisely.
And to fuel this, they're planning some serious investment, aiming for a record profit this coming fiscal year. FYE 2025, that's the year ending in 2025 for anyone wondering.
That's the one. They're targeting 880 billion in consolidated net profit. That's up, what, about 10%?
Yeah, roughly 10%.
And to get there, they're talking about investing up to 1 trillion in that same year. So they're putting serious capital behind the strategy.
yen trillion. Wow. But they're not just throwing money around, are they? The report mentions lessons learned.
Right, they call it the 4 lessons for investments, basically trying to avoid past mistakes like overpaying or getting too tied to one partner. They're sticking to areas they know well, looking for smart collaborations. You see it with Hitachi Construction Machinery, WeCars.
Makes sense. Learn from experience.
And it probably helps them really assess market needs before committing huge sums.
Now, it's not just traditional business growth. They're big on clean tech, too. That feels connected to the Sampoyoshi social good aspect.
Definitely. Their goals for cutting greenhouse gas emissions are ambitious. Offset zero by 2040, net zero by 2050.
Those are big targets. How are they tackling that?
It's really broad. Green hydrogen value chains, carbon capture, use, and storage. CCUS developing ammonia-fueled ships, investing in renewables, energy storage. It's a whole portfolio.
So quite diverse. Any specific examples jump out?
Well, they mention collaborations, like working on a low-carbon steel supply chain with JFE Steel and Emirates Steel Arkin. And they've invested in Everfuel, a green hydrogen company. It shows they're active across different parts of the potential low-carbon economy.
It sounds like they're trying to build ecosystems, not just isolated projects, like connecting hydrogen production to ammonia ships, for instance.
I think that's a good way to put it, leveraging their scale in different business segments, which ties back to their overall growth strategy, right? Using collaboration across the company.
Right, integrating things to develop those downstream businesses closer to us, the consumers, leveraging their existing strengths further up the chain.
Exactly.
Okay, let's shift gears a bit. What about the hard numbers? The financial highlights look pretty strong in the report.
They do. For the fiscal year ending 2024, they posted 801.8 billion in consolidated net profit.
And aiming for that 880 billion next year, FYE 2025, plus a record core profit target too.
Yes, 860 billion for core profit. But what's really notable is the consistency. They talk about a 13% compound annual growth rate in net profit since FYE 2011.
13% CAGR over that long. That's quite sustained growth.
It is, and they're clearly focused on efficiency too, how well they use capital. They target a return on equity ROE of 15% or more long term.
And they've been hitting that.
Their average ROE from FYE 2011 to FYE 2024 was actually 16%. So yeah, they're delivering strong returns on shareholder investments.
Okay, let's look at the balance sheet snapshot from March 2024.
Ah.
What are the key figures there?
All right, so total assets were around 14.5 trillion. Net interest-bearing debt was about 2.7 trillion.
And the debt level compared to equity?
That's a key one. Their net debt to equity ratio, net DER, hit a record low of 0.51 times. Very healthy.
Yeah. And shareholder equity?
Total shareholders' equity was 5.4 trillion, making up 37.5% of total assets. The ROE for that specific year was 15.6%.
Yeah.
It all points to a really solid financial base.
Any external validation of this strength?
Well, Moody's upgraded their credit rating to A. First time in about 20 years, the report says. That's a significant nod.
And it's not just the parent company doing well.
No, it's widespread. Apparently, 92% of their group companies were profitable in FYE 2024. Those subsidiaries contributed something like $740 billion to the bottom line.
Impressive breadth. Okay, crucial question for investors. Shareholder value. What's the plan there?
They're pretty clear. A total payout ratio target of 40% or more. That includes dividends and share buybacks.
40% or more.
Yeah.
And the dividends specifically.
The policy is the higher of two things. Either a 30% payout ratio based on profit, or a minimum dividend of 200 per share.
200 yen minimum. That sounds like a big step up from before.
It is. The dividend for FYE 2024 was 160 per share. So guaranteeing a minimum of 200 is a substantial increase, about 40.
And buybacks, are they doing those too?
Yes, actively. They've announced plans for 150 billion worth of share repurchases in FYE 2025.
So a combination of rising dividends and buybacks.
Exactly. If you look at the trend, the dividend per share has climbed steadily from 46 back in FYE 2018-2020 to this planned minimum of 200. And the total payout ratio has jumped too, hitting 60% in recent years, with that 40% minimum target going forward. It shows a real commitment to returning capital.
Okay, so wrapping things up, based on this report, what's the overall picture of Itochu moving forward?
Well, it looks like a company that's financially strong, has a clear, ambitious strategy with the brand new deal, and is really focused on delivering value back to shareholders.
The downstream focus, the clean tech investments, the shareholder returns, it all seems quite deliberate.
Very much so. They seem to be building on their traditional strengths while pivoting towards these newer opportunities.
You do mention potential risks, though, don't they? Geopolitics, China's economy, the yen.
Yes, the TSE analysis acknowledges those external uncertainties, things like instability, a potential slowdown in China, the impact of the yen exchange rate longer term. But importantly, they also talk about having risk assessment processes and countermeasures in place.
So they're aware, but trying to be proactive.
Seems that way. And they also highlight efforts in governance, more outside directors, a women's advancement committee, and their HR strategy, this people-centered management. These are sort of the foundations they believe will support sustainable growth.
It all comes back to trying to enhance corporate value sustainably, guided by that Sampoyoshi idea, balancing everyone's interests.
Precisely. It's this commitment-based approach, trying to deliver on promises to all stakeholders, that seems central to how they operate and plan for the future.
Well, this has certainly been a comprehensive deep dive into Itochu's 2024 report. We've covered the strategy, the financials, the shareholder plans.
And hopefully what you take away is how this long-standing philosophy, Sampoyoshi, really does seem to inform their path forward in, let's face it, a pretty complex world.
Absolutely. So here's a final thought for you to mull over. With Itochu pushing further downstream towards consumers and making these significant bets on sustainability and clean tech, how might that unique blend position them for success as the global market keeps evolving? Thanks for joining us on the Deep Dive.